Hey guys, welcome to the Pivot Trade, the channel that teaches you how to benefit from trap traders and become profitable. Welcome to another video on the price action analysis of Nifty and Bank Nifty. This is the price action analysis of the 5th of July 2022. And let's just reflect back on yesterday since I wasn't able to make a video yesterday. Now you could see here that yesterday we'd seen a good rise right from the level of about 15,660. Okay, so there was a good rise from yesterday, and then you could see that today we had a gap up opening. Now we've already marked all these levels, right? And you could see that price action actually opened right within a few levels that we had marked. We had actually marked this level, the level being around 15,911. You can see this level here, the red level that I've marked, and we'll also mark this dotted level which was at 15,890. So price actually had to open between these two levels here, and you could see that price was taking support initially at the red line here. Now the red line indicates that it was a supply zone. And what was the supply zone? Where was it coming from? You can see here that price had crashed from here. That was from the 27th, and we had marked that zone here. Okay, I had talked about it in that video itself, that we'll mark a zone there, and that zone was important, right? It was also the lower border of the gap. So we had marked that zone, and exactly at around that region you could see that price had opened and it was taking support exactly at that supply zone. So that's why I always say in technical analysis, supply zone acts as a support when the price is on top of it. So you could see the price opening here and then this particular green candle forming. Now tell me, what is the psychology of traders when they see this sort of a candle, the first candle? You could see that the price had bounced from here, right, since yesterday. So if you see this particular low, then you can see from here that from this low to this high, the bounce was nearly 200 points yesterday, and today's gap down from that low was, today's gap up from that low was about 250 points. That was the gap up from yesterday's low to today's open price. And you could see that the gap up was significant today, right? This was the day high. So see here, so from this day high to this particular open, it was 60 points, and if you want to consider from a close to open basis, then this was around 84 to 85 points. So it was a significant gap up, around 84 to 85 points from yesterday's closing. And then you could see that this particular green candle will invite a lot of buyers. Now why would it invite a lot of buyers there? You know that this particular candle is a green candle, it looks pretty strong, and this particular candle will indicate to the buyers that a lot of buying has happened right before the candle actually opened, because it had opened back gap up, right? So this candle will have a lot of buyers in it. You could see it opened here, it closed here, but there was a long wick on the bottom, and this particular wick is a buyer's wick. So this wick is good, and this particular candle is a strong green candle. Now what we will do is we will delete these levels because they are not important to us right now. So we just delete this level so it will get clearer. You can see how that supply zone, the red line, is acting as a support here. Exactly at this point, price took support, it consolidated for a while, and it waited there till it shot up again. So now we'll delete that line, we don't need that anymore. And now you can clearly see that this particular gap that we had marked has been partially filled there. Okay, so we will just reduce that gap a bit here, and we'll take it to the today's day high here. Okay, now we can see the price action clearly there. We'll also delete this level here which we had prior marked from the 27th. Okay, now let's study this price action here. Now you know that if there are a lot of buyers in this area, then what would they normally do? They would be keeping their SLs below this level here. And why are their SLs important? Their SLs are important for one simple and big reason. See, the traders who are long since yesterday are still holding on to their positions, and those traders who have missed this particular rally from yesterday are suffering from a big psychological condition called FOMO, which is the fear of missing out. So all these traders who are suffering from FOMO, who could not participate in yesterday's rally, are itching to jump into the moment they're itching to jump into the market or into a trade the moment they see a big bullish sign. And all they want is a big bullish sign or a bullish sign. It doesn't even have to be big. And also there are positions open of traders who are still long from this particular point or this point yesterday, right? So their positions are also open, and these traders who have missed out on yesterday are also in the line, in the queue to take long positions, as well as those traders who have made good profits yesterday, who have suffered from another emotion called greed. So these are all human emotions, and these traders who are suffering from greed, these traders will be basically again greedy to jump into another trade today whenever they see that there is a good opportunity, and then the first candle itself presents them with a good opportunity. Why? Because it is a gap up candle, and the general consensus is that whenever the candle has opened the gap up, then after a certain rally and the next day when the candle gaps up, it is going to be another rally, it is going to be another trending day. So they think that today is going to be a trending day to the upside, and those traders who are suffering from FOMO will jump into this, those suffering from greed will jump into this, and anyway there are traders who are holding on to their long positions since yesterday. So there will be put shorters since yesterday, there will be call buyers since yesterday who will already be having open positions in yesterday, who are sitting on good profits right now. So when they see this particular gap up candle, all those traders will either suffer from greed or they'll suffer from FOMO. For those who have missed out, will suffer from FOMO. And so this particular candle will be a very important candle. When they see this, all of them will jump into that particular candle, whether they suffered from greed or FOMO. And now imagine that there has to be a lot of long positions open in this particular candle. Now if this particular candle's low is taken out, imagine what happens. If this particular candle's low is taken out, there will be a big crash in price, and the crash will end up at the CPR, right at the central pivot range, because the crash will be so big that it will end up at the CPR. So usually I have seen these traps work. It actually happened to work today also, but before that it actually gave a good trend to the upside also. You could see that price had opened around the R1 and it actually went right up beyond the R2. It did not reach the R3 here, it was further away, but it actually happened to reverse from this particular position. And actually after this particular rally here, it actually tended to go sideways for a long time here before it actually started to dip down again. So I was expecting this crash to come earlier. It actually came much later. In fact, it was actually in the later half of the day, not in the first half of the day. And you could see here that after this particular candle had formed, this green candle, price spent some time here, and then this big green candle was formed, which launched price into this particular move here. But then a lot of resistance came through, and usually I have seen price reverse right from the first candle itself. But sometimes it happens that price goes up here and then it tends to take resistance, then takes the low of this candle and then crashes to the CPR. Now it happened very late today, but it did happen. But then again you could see here that if you were to trade on that particular candle, after that particular candle's low was taken out, then you should have marked the low of this candle, and then you could see that that low was not really taken out by a very strong candle, that candle had a wick on the bottom, and this candle did not really suggest of a breakout. This is a breakout, isn't it? It is a breakout of this particular candle's low range. And as I said, these are all SL, this is an SL rich zone. But the selling started coming right from here, and all those positions or all those traders who had long positions in this particular rally in the first half of the day had to panic and close their positions with a panic in the later half of the day. So you could see how this particular candle broke out of that, but did not really suggest a breakdown. But yes, that was the breakout candle, and then it actually came right down to the CPR. So That was what I had tweeted early in the morning also, that this could be, the first candle could be a trap candle, and that could be a trap candle because I had seen the rally yesterday. And this is what I have usually seen in Nifty and Bank Nifty happen multiple times. So whenever you see a good rally or a good trend in one day towards the upside, and when the next day gaps up and forms a good bodied, either a Marubozu green candle or a bullish pin bar like this, then you can be at least 60 to 70% sure that if the price were to retrace back to the low of that candle, then there might be a big sell off to the downside. But today the price action did not really suggest that. The price action normally would go up here and come down immediately, or might come down from here itself. Today it had actually gone up here, so the selling had actually started in this particular area itself. This was a kind of a distribution zone, and then the sell off started, and then it took out the low and came further. So when it comes falling from this particular area and then it takes out the low, it is not really a very wise decision to go and short here, because this might be a failed breakout and price might just jump up and go up again from here. When the price is falling from here, the probability of the price going and reaching the CPR is lower. Of course it did today, it did fall to the CPR, but it's a lower probability that the price will go and hit the CPR. So once you see that the selling has started from this point and there's a breakout at this point, after such a long sell off, you should not go and short here. Remember, you're entering the market very late. We are not interested in entering the market late. We want to enter somewhere at the top, or we want to enter somewhere at the bottom, right? So buy low, sell high, or sell high, buy low should be your mantra. So that is exactly what happened today. So this was also not a very good trade to take once the low of that first green candle was taken out here. In spite of the fact that it was taken out, and in spite of the fact that price did fall to this point, this particular candle did not give any confidence of a breakdown. And the second part was that the sell-off started here. So you should not go and short here at all. So as we just adjusted the gap up here, now do we have a version CPR from today? We don't have one, because we can see that there are candles inside it. And do we have any other levels? So we have already marked this green line here, which was a demand zone from yesterday. You can see here, and there is a demand zone here at 15,510 level also. So those two are the demand zones. We don't have any virgin CPR. Yesterday, in yesterday's price action, the virgin CPR coming from 1st of July was violated. Price went through it yesterday, so it no more was a virgin CPR for today. And we have shifted the gap, so the gap is reduced slightly today, but not entirely. So this is the gap that is already also there, and you can see that the top border of the gap is around 16,170. What do we have on the 15-minute time frame now? We can see a big sell-off from that level. So we obviously know that this particular day high will be a strong supply zone for a price to come back. And we also know that this particular area, which happened to be the area where the price had opened and or made a low and then bounced up, and then this particular candle had blown through it, this level is also important, which is around 15,890. But it is right within the CPR for tomorrow, so we will not bother to mark it. And we do see a wide CPR for tomorrow in Nifty. If you can see, it is around 60 plus points, so it is a wide CPR in Nifty tomorrow, just like it was today. Okay, so now let's head to Bank Nifty and see what Bank Nifty has done today. So this was Bank Nifty, very much identical to Nifty, and it also opened with a strong green candle. Again, the same psychology here which I just explained, so I will not explain that psychology again. But we see that there's a big green body there, and it opens above the R1 pivot, takes support here, then bounces up right up to the R2 pivot, and then you can see that it has taken resistance at this particular area. Now you can see how this particular area was marked in a green line. It was 34,346 level, and that area was marked in a green line from previous price action, and now it has acted as a resistance. So we can now see that that area, which was a demand zone prior, is acted as a resistance in this area. So always remember that phenomenon. Okay, these levels are important. So we will be deleting this particular line now. This was the red line, which was a supply zone in Bank Nifty, and we can see how Bank Nifty has gone right up to that particular level, which was 34,346. So yes, that level is important, but now what we will do is we will delete that level and we will mark it as a fresh supply zone. So we will mark the previous day high, that is today's high, as a fresh supply zone here. And looking at the 15-minute time frame, we could mark a zone also there. So if you want, you can mark a zone also. So just let me just make this line red. Yeah, and you could mark a zone if you want here. So it will take more touches there, and that zone is going to be important. So always remember and always take care of that zone whenever price comes to it. Going back, we can see that the zone has been marked on a higher time frame of 15 minutes, and that's how it looks on the 5-minute time frame. Okay, this is the price action in Bank Nifty. One important level I wanted to talk about is this particular level, which you can see has been broken, but you can see that this level was taking support here. That level was extended below. So whenever you see such wicks, you should actually go ahead and extend or lower that level downwards. So you can see how that level, when you lower it down, it is taken down to this particular level. Again, another wick here. So remove that level, put it further down, and you can see that there is another wick there, which is right here. So that level is still not broken. So you want to extend that wick here, that level here. And now you can see that finally this is the breakdown candle. So from this low, it actually came to this low here. Although price did keep coming down, but it came down with wicks. No candle actually closed below any wick prior before this particular candle here. So this will be your candle to short. So if you want to short that candle, then you can go ahead and short this here, keep your SL above here, but immediate profit booking should happen at the CPR. So not exactly a very good risk reward. Again, if you can see, this is the risk and this is the reward. So not exactly 1:2. So usually you should not take that trade. If you had some more distance between the previous day high and the current day CPR, then yes, it was a good trade to take, but that was not so today. And had there been a clear indication of a breakout right at this level, that it would have been a very good trade there to take. But that did not happen. We did not get a clear indication. All these wicks kept coming down. You can see all these wicks that kept coming down below that first candle's low. And so there was no clear indication of a breakdown till this particular candle here. Okay, so had there been a clear breakout from here, so if we had seen something like this kind of a candle here, which was a clear breakout candle, then it was a good idea to go ahead and short this level here and keep your SL above here, and then you can take your profit right here. So then you can see that the risk reward is much better. So I hope that explanation is clear to you as to why we should be trading on the breakout or breakdown from the first candle's low, and I hope that you've understood it. If not, you can go back to Nifty's explanation and see that part of the video again. We do not have any virgin CPR coming from today's price action. You can see candles inside it. We have a virgin CPR coming from the 4th of July 2022, that is the session yesterday. And yes, we don't have any other levels to be marked right now. Whatever levels we have historically marked, they will be the levels that will tend to continue forward. So this level is going to be important now, the 34,360. We have seen a big fall from there. Let's check how much was the fall. So from the high, you can see that to the low, Bank Nifty has made fallen by 600 points, and that too right from 1230 to 330. So that's about in 3 hours that Bank Nifty has covered a fall of, or it has fallen, I should say, by 600 points. So that's a major fall. And we again have a wide CPR in Bank Nifty also tomorrow, just like we saw in Nifty. It's about 160 points. So that is a wide CPR. Alright, I think that should be all for the price action analysis of this day, the 5th of July 2022. And I hope you've liked it. If you have, please hit the like button, subscribe to the channel, and hit the bell icon so you're notified each time I come up with a new video. Do leave your comments and doubts in the comment section, and I'll catch you in the next one. See you guys. Bye-bye.